Hello, I'm Tim Beggins, president of Elk Trading Company. In today's natural gas weekly recap, natural gas prices are down, currently trading 2.916 or down 1.4 cents or 0.48% as we are in the May option expiration day. The futures expiration is Monday. And as you can see, prices continue to just oscillate toward the bottom. And we're trying to find one here without really weather support. Currently, right now, we are just sitting above well, actually a little bit below that 2.935 pivot support. And then right below that will be 285.30. Again, we've got just today and Monday for trading for the May contract, and things continue to look weak. The major option position is around the $3 strike. We're well below that. So let's take a look at the hourly chart. As you can see, we are holding right above that pivot support here at 2.8530. And then really we're staying well below here at this pivot at 2.935. We just seem to lack the oomph to get up and go over to the 3011 resistance level. Again, the option expiration is today, and the major position is around the $3 strike. So let's take a look at June, which will be spot on Tuesday. As you can see here, prices continue to hold above yesterday's low, but it just doesn't it doesn't have any oomph to get going. Why? No weather support. We'll look at that in a second. The RSI is still signaling that it is an oversold condition. So why are prices under pressure? Well, the storage report. Yesterday's storage report was plus 88, a big number for this time of year. And that puts us really just below 20% against last year, 19.8%, but only 2.2% below the 5-year average. So which is more important? Well, my belief is last year. Why? We've got rising demand coming up. We're from AI, power centers, semiconductors, and reshoring of manufacturing. So looking at the 5-year average, which includes some of the COVID and post-COVID years, really isn't that informative. So look for last year's numbers. We're still just below 20%. And so that means we still have a bull market. We just lack the weather support. And here's another reason why prices are still down. The nuclear outage season seems to have peaked. We're down to just 17,290.9 megawatts out for refueling. And this will bottom out as we get into the first week of July. So what has worked? The front to back spreads. This is the Jan versus May contract spread. Again, we've only got 2 trading sessions left in this, and it is moving toward that 180 break-even point we've talked about before. Currently trading at 175. Looks like we're going to make a run for it. Let's take a look at Jan versus October. As you can see, we're well above that dollar break even. We've gone through both resistance levels at 106.20 and 109.80. But we are looking very carefully here at the RSI, which is telling us we're a little bit overbought and we're looking for a reason to compact this spread. But we need some support for the prompt June contract on Tuesday, and we're unlikely to get it. Let's take a look at the 8 to 14-day temperature outlook, and it looks like above normal temperatures in the upper Midwest and parts of the North Pacific Northwest, but near normal in Texas and even parts of below. As you can see, this isn't going to help us at all. Pro tip is we need 2 consecutive days of 90 degrees plus on the forecast map for Dallas before we can really rally. And we're not going to get it anytime soon. As you can see from the temperature anomalies, this is from the Climate Prediction Center, we look to see some above normal temperatures across from Texas all the way out into New England for this week into May, but then it's the upper Midwest. And then it looks like it's the Northeast and again, the Pacific Northwest. We really need Texas all the way over to Florida, the whole entire US Gulf Coast to be above normal in order to get prices to move higher. And we still have that drought that is continuing to expand around San Antonio, all the way back out into California and parts of Nevada, as well as Utah. So we'll be keeping a careful eye on this as this will keep AC load going strong. And let's take a look at the oil and gas E&P sector. These are our stocks that we're keeping an eye on for when things start to turn around. As you can see, we're looking for the mid value here between 2 and $10 billion. We're looking at stocks that have a short float of over 10%. And as you can see here, we've still got the same stocks: CNX, Comstock, Magnolia Oil and Gas, Murphy, and Northern Oil and Gas. And so, how have they looked for this week? Well, just poor. Really, for the week, they're down. The only thing that's flat is Magnolia. So we'll keep a careful eye on this. But right now, things are still under pressure for the expiring May contract on Monday, currently trading 2.914 or down 1.6 cents. So let's take a look at it, see what happens over the weekend. Maybe the weather forecast will change. If not, we're going down even further. Let us know your thoughts in the comment section below. Please hit that like and subscribe button. Thanks for listening. We'll see you soon.